The IRS estimates that the tax gap was $688 billion in 2021. When the IRS says this, it's asserting that Americans failed to pay $688 billion of tax that they were otherwise required to pay. To put that in context, the federal government spent $689 billion on Medicare in 2021, providing health insurance for the 55 million Americans over the age of 65. The huge tax gap numbers regularly make the news and provoke outrage on Capitol Hill. The tax gap is therefore a useful tool to justify the expansion of the agency determining the tax gap. But the methods used to determine the tax gap have been criticized by tax researchers. Most glaringly, the IRS uses its audit adjustments to determine many aspects of the tax gap. But as any tax controversy attorney can tell you, the IRS's audit adjustments are regularly overturned when appealed. Reliance on raw audit determinations without consideration of the overstated tax adjustments that audits produce means that the tax gap may be far too high. But on the other side, IRS audits are ineffective at finding certain types of tax evasion. Income associated with cash transactions, cryptocurrencies, bartering, foreign activities, and many other types of transactions may be impossible for IRS revenue agents to detect, even if they're assigned to the case. Because of that, the tax gap may be significantly understated. But despite those limitations, the tax gap does give us an idea that there is significant tax noncompliance. What can be done? Rather than more draconian penalties and additional prosecutions, perhaps those in power can consider designing a simpler and more administrable tax system.